So how is the STI, the Singapore stock market, looking as we head into the end of 2020, or maybe when we go into 2021? Hey guys, Joey here, top tier advisor in Phillip Securities and chief trainer at Trading Impulse. Right, this year 2020 has been one of a roller coaster ride. We have seen STI, just the beginning of the year, it was like 3001, 3002, breaking some of the key supports level like 3000, of course, when the pandemic hit, and we've traded all the way to like 2002, rebounded, selling came back again, came back down, and over the past 1 to 2 months, we've kind of like rebounded back to somewhere around that 2,867 right now. So a lot of people have asked me, Joey, what is your view, of the STI going forward into next year, 2021? Or is there, still weakness, is to be seen? Can we potentially head back down to those levels that we've seen over the past 2 to 3 months, like the 2004, 2005? Or is it like a good bullish market happening in like 2021, right? And this is what will be covered in today's video, right? So if you're keen to find out more about the outlook for the Singapore market STI, right, do stick around all the way to the end of this video. I think I've got something that you like, and let's go ahead to find out what it is. So here is the STI, Singapore stock market, right away here, Straits Times Index, and about 2,867 as we head to the end of 2020. So you can see that this whole year has been really volatile, right? So we were like all the while, supported above that 3,000 level just before, the pandemic hit, and we broke that 3,000 and traded all the way to like 2,200 in like 1 or 2 months and rebounded, but then selling came back again, right? And there were talks about a second wave of the virus coming back again, and it kind of sold off back down to that 2,400 support level. Right, but you can see over the past 1 month plus, right, since early of November, there are talks about a vaccine coming out. In fact, over the next few weeks around the world, right, many of these governments will be rolling out their vaccines to the population. So that's a good news, and that's where a lot of people have right on it, all right, and I kind of like got into to ride the rebound or the recovery phase, and we've seen STI rebounding from like 2004, 2005 all the way, right, breaking that 2007 and coming to about 2,867. So the question is, as we go into 2021, right, would there be more upside? Will the reversal continue, or will we head back down to those levels? Like a lot of clients have asked me, Joey, can we start to see a bit more weakness, or with prices like kind of like hitting back to that 2004, 2005, those who have like missed and did not get in then, right? They're like thinking if like prices will like hit back there again for them to buy, and then they can catch the rebound again, right? So will that happen, or is it like more like a upward trajectory, right, heading upwards now, and it seems like there's a bit more bullishness coming back in the market, right? So this is what we'll cover, right? So you can see that over the past 1 to 2 weeks, right, after pushing higher, just above that 2,800 level, right? So we broke that 2007, and over the past 2 weeks, we can see that we broke that 2008, and this 2,800 level. Let me just go ahead to draw this good support level, right? So this was originally, all right, the resistance level we've seen somewhere in June, all right, 2020. We kind of traded up, broke that level, and went all the way back down. So right now, right, this resistance at 2008 is key, all right, it's key. Look at this, right? So it was a resistance, it kind of like turned support, we broke it, came back down, and over the past 2 to 3 weeks since like about November, mid of November, we have been holding, all right, above that 2,800 level, and this is also where the 20 days moving average is as well. Look at this right over here. So it's about 2,866 right now, which is trading above that 2,800 level. So in the short term, I think it looks, in terms of the market, in terms of the reversal, I think it looks quite good, right? In fact, it looks a bit bullish above that 2,800 level. So as we head into the end of the year, or maybe 2021, I think if we do stay above this level, all right, there could still be a bit more upside. There could be a bit more reversal, right, in terms of it, retracing all the way to like 2009 to 3,000. Let me just go ahead to draw some upside targets. So I think right now 2009 would be the immediate resistance, but if that gives way, if the bank started to push up again, we can see it trade all the way to about 3,000, and then that's where it might consolidate again. Right, so I would say the market looks definitely more bullish than it was just a few months back, just before any talks about a vaccine. But right now, a lot of people are buying the hopes of this vaccine, which will eventually be rolled out. I would say that the worst is more or less like over in terms of the whole entire pandemic in March, April, May, circuit breaker and all that. I think it's more or less over. People are looking forward, looking at the vaccine being rolled out, and eventually everybody will be vaccinated. All right, and that's where things can slowly get back to normal, and we might eventually see the recovery of the markets, the economy in terms of employment numbers and all that. All right, so people are buying to that, and that's the reason why we kind of like shot up by more than 15 to 20% over the past 1 to 2 months since early of November. All right, so let's take a look at the longer term trend, the mid to long term trend. You can see that when we broke that 3,000 level, all right, somewhere in March, all right, right over here, we kind of like sold off. So then, right, there were already some signs of weakness. I think I covered it in previous video on the STI. Right, look at this right over here. The red line, the 100 days moving average, was like pointing down, all right, below that blue line. So there are some signs of a mid-term trend kind of like turning from a bit of sideways to down in March and April. So we kind of like really sold off quite badly, right? But look at this, right? Since like April to somewhere around October, all right, 5 to 6 months, we were like consolidating, all right, consolidating, and the moving averages, look at this, the red line, 100 days moving average started to flatten out, all right, started to flatten out. And right now, look at this red line, 100 days moving average. Can you see that it is kind of like pointing up, and it is like kind of like breaking or crossing back above the 200 days moving average right here as I'm talking right here, right? So it seems like it's crossing back above that 200 days moving average. So I think over the next few days, if we do hang above that 2008, this red line will eventually cross back above that 200 days moving average. And what does that mean? It means that there are some signs of the mid to longer term trend kind of like turning from a bit of down, sideways, and now potentially moving up, right, as we head to the end of the year or maybe to 2021. Right, that's a good sign of the market kind of like continuing its reversal. Look at this right over here, the red line, 100 days moving average, potentially crossing back above the blue line. Of course, for the short term, we look at the 20 days moving average, somewhere around November, right, when the market kind of broke above that 2006. Right, the green line have really gone above both of these longer term moving average. So in the short term, it started to push up. All right, so that's a good sign in the short term already. All right, and I mentioned we are holding above that 2008. Right, so yeah, take note of these two moving average. So I would say there are some signs of a good reversal happening as well in the mid to long term because of the moving averages turning up, and of course with us holding above that 2,800 level. So a lot of people have asked me if if it will actually go back to those levels at 2004, 2005. I think the worst might be over. I think if we do hang above that 2008, we might start to see the reversal continue, or more strength rather than weakness as we head into next year. Of course, barring any negative news flow, for example, if we have like a second mutation or second strain of this virus happening, or if there's like a second wave of infections, then yeah, we might see a bit of weakness coming back again, but it might start to retrace back down to probably like 2007, 2006, and that's where buyers might start to come in again. All right, so I would say that the worst has probably been over, all right, and we are looking a bit more positive, a bit more bullish for the whole entire market, for the STI, and that's a good thing. I would say that next year will be a bit more bullish for the market as long as we hold above some of those good supports like 2008, and we get past that 3,000. I think that will be a good level whereby the market will kind of like turn bullish. Alright, so this is the STI. I hope you have taken note of the levels. Alright, and I hope that you like this video. If you have, be sure to give me a thumbs up. Alright, it will definitely help out the YouTube algorithm. Of course, if you have not yet subscribed to this channel, be sure to smash the subscribe button so that you will not miss out on videos like this. Alright, so thank you so much for watching. Joey here. Take care.